Welcome to the Tokenized Economy. Here is today's explainer on why equity markets are exploring tokenization.
All right, let's jump right in. We talk a lot about what tokenization is, but today let's tackle the why. Why are the biggest equity markets on the planet taking this so seriously? What's the real driver here? Let's dig in. Okay, to get why this is such a big deal, you have to wrap your head around the scale we're talking about. The global equity market? It's over $140 trillion. That's a staggering number. And when you're playing in a sandbox that big, even the tiniest little improvement in efficiency, a fraction of a percent, suddenly unlocks billions of dollars in value. So we're not just talking about a minor software update here. This is a potential seismic shift in the very plumbing of finance. So where do you even find room for improvement? Well, for that, we need to take a look under the hood, into the engine room of the current system. And it's really important to get this. Today's market infrastructure, it's incredibly robust. It's not broken, not by a long shot, but it is complex.
Think about it. The last time you bought a stock on your phone, you tap, buy, and boof, it seems like it's done, right? Instant. But what's really happening behind the curtain is that your order is on this journey, navigating a whole web of different players. Intermediaries, clearinghouses, settlement systems. The whole thing actually takes about a day to officially settle. That's what we call T+1 settlement. And look, it's a solid system. It's worked for decades, for sure. But all those moving parts, all those handoffs, well, that's exactly where the opportunity lies to make things a lot more efficient.
Okay, so if the system isn't broken, what are we even trying to fix? And that's the key right there. It's not about fixing something that's failed. It's about taking a system that's good and making it great. It's about making it faster, cheaper, and just plain smarter.
So what are the big prizes here? Well, there are three of them. First up, faster settlement. Just imagine your trades clearing in minutes, maybe even seconds, instead of waiting a whole day. Second, and this is a huge one, is better capital efficiency. That one-day waiting period, it ties up incredible amounts of money that are just stuck. They could be working, invested somewhere else. If we free that up, we inject a massive amount of liquidity into the entire market. And third, just streamlining the whole operation. By simplifying the process, you slash costs and seriously cut down the risk of something going wrong.
So how do we actually get our hands on these improvements? Right. This is where tokenization enters the picture. And I want you to think about it as more than just a new piece of tech. It's like a whole new blueprint, a new architectural design for how financial assets are owned, managed, and traded.
And you can really see the difference side by side. You go from a T+1 settlement cycle to something that's pretty much instant. Instead of all that messy, complex reconciliation after the fact, you get programmable assets. Now this is a game changer. It means you can code the rules, like who's allowed to own this asset or what happens in a certain event, directly into the token itself. Compliance becomes automated. And what about all those intermediaries? They don't just disappear. No, their role evolves. They become value-added players in this new, way more efficient ecosystem.
Okay, and I really want to land this next point because it's crucial. This is not some violent revolution where we're ripping out the old system and throwing it away. Not at all. The vision here is one of evolution. It's about building bridges, so that the traditional world and the new blockchain-based systems can talk to each other, they can integrate, and they can operate side by side, each one doing what it does best.
Which, of course, brings up the big question, why now? Blockchain tech has been around for a while, so what's different today? Well, it really feels like we've hit a kind of tipping point, where a few massive forces are all coming together at the exact same time. It really comes down to three main things. First, the tech itself is finally ready for prime time. Blockchains today are just way more robust, way more scalable than they were even a few years ago. Second, the big players, the major financial institutions, they're off the sidelines and they're in the game. They're not just watching anymore, they are actively building. And third, you've got this massive pull from the market itself, a real tangible demand for more efficient structures. So you've got this perfect storm, right? Tech readiness, institutional buy-in, and market demand all hitting at once. So that's the why. But what does this actually look like when the rubber meets the road? How is it being implemented? Well, in our next explainer, we're going to dive right into that. We'll explore the four distinct models that are popping up as everyone in the ecosystem tries to figure out the best way to bring equities on-chain.